I'm going to start with a 1-minute video and get straight into it after that. Thank you again for joining us. Buckle down and let's get going. Let's churn through the bandwidth. And churn a bit more. There are very few absolute facts in life. Very few absolute facts in life. Some of them are that you are born and you will die, the sun rises and sets, time waits for no one, you can't change anyone, they need to choose to change themselves, and the only thing paying any attention to that's worth it is what you have 100% control over. In a survey done of 10,000 established businesses, fact, 88% of them said that they want to grow. Of them, less than 15% had a plan to turn talk into walk. 95% of their employees were unaware. 68% of their functions were completely misaligned. And it's no wonder that only 5.4% of businesses started managed to sell and exit at the end of their tenure. And of those going through succession, be it in family businesses or professional services, 73.9% fail from founder to successor. So business owners went out and they looked and sorted and got for help. And they found it with advisors who told them what to do, coaches who helped them get their headspace right, consultants who researched what they ought to do. Some of them took on MBAs and met a whole lot of other people in their class. Some went to accountants who told them what happened yesterday. And a lot of us go to success seminars so we can feel good. It's no wonder that 88% of the 10,000 businesses were grumpy about the fact that what they wanted was growth as an outcome, not advice. And in those that were given advice, just over 5% were able to implement it. My name is Pavlo Phitidis. I'm a co-founder of Aurik, the current CEO, investor, and an author. I welcome you today, and because PowerPoint presentations are boring, I'm going to take you on a journey. I want to share a little bit about our origin because it matters where we come from, since it informs the future. The problem and solution that we've identified is of value to established businesses, what tomorrow could look like today in your business, how we would work with you to resolve the issues that may or may not exist in order to deliver 3 outcomes, an invitation, and then from there we're going to move into breakout rooms. I will have you out at 5 minutes to the hour because no doubt as business owners, we are bouncing from one engagement to the next. So once upon a time, many, many years ago, despite the fact that I'm only 30 years of age, but many years ago, I was born to a family of entrepreneurs, 2 uncles and a father, all of whom were in business, all of whom worked hard, and all of whom worked well into their 80s, not because they loved it, but because they had to. They succeeded in building income-generating businesses, but not businesses that they could exit for a capital gain and secure their pensions. My very first instance in business saw me acquire 2 businesses in sequence, both for $1 apiece, taking on extensive debt in the businesses. Thankfully, both were successfully sold over the 9-year period that I was involved in both of them. What was interesting, however, is that the first business had been acquired from 3 partners who were founders in the business, all late into their 60s and early 70s. The second business was a husband and wife that had started the business. The business itself was around 35, 40 years of age. They had approached their late 60s, and both sets were unable to exit businesses that had generated good income for them and their families to that date. I left that environment and went into mergers and acquisitions and was, on the one hand, privileged, but on the other hand, saddled with an enormous portfolio of businesses, all looking to do transactions. And if I could transact with 3 to 4% of them, I was fortunate and lucky. Most of the business owners had overvalued their businesses, had big expectations around what the fair value would be, and many of the potential buyers could not correlate or see that value from the owner's eyes. I got hauled into a family business and found myself stuck in a conflict with my father around his particular business, him being many years older than me. He had no exit plan, he had no succession plan, and it was an emergency turnaround that eventually got sold, thankfully giving my parents their pension. Burnt out, I moved into the area of consulting, spent a number of years in the US, and worked extensively around capital raising, whilst at the same time working for one of the leading MBA colleges, marking company valuations from the MBA students. And this happy coincidence started to give me the financial understanding and mathematical design and architecture needed to turn a good income generating business into a business that could increase its value through the adoption of 5 levers, which I will share with you a little bit later. At the same time, I got access to extensive information around the performance of businesses across the US. 94.6% of businesses started in the US failed to sell. They closed at tremendous cost to the owners, their families, and employees. Interestingly, in Australia, that number is 97.2%. This was a problem worth solving. And through that, I established Aurik with my co-founder. We then started, built, and sold 12 businesses over 9 years across 6 sectors. 2 listed and IPO'd, 2 failed, which were fantastic because there was real insight. 3 were sold through management buyouts in succession, and 5 were sold to corporate entities. What was most valuable, however, is that the last handful of businesses took half the time and more or less a third of the investment to build to the same value as the first handful. And together, she and I started to understand and articulate what we had done well in the last handful in comparison to the first handful. And through that, we shaped out a growth system, which we have subsequently since had the fortunate benefit of now serving across 3,017 businesses in 4 countries. Through those businesses, the average compound annual growth rate in revenues sits at 28.9%, effectively doubling the revenues every 32 to 36 months. The EBITDA growth rates have sat at 32.4% as an average, and our clients thankfully like us. We now deliver 3 outcomes for our clients. The first is an instance where you're looking to scale and grow. You've got traction in the market, you've got gas in the tank, and you want to ramp up your revenues, you want to double up, treble up your size, and you want to deepen your profitability. Ultimately, you're looking to now take what's working, accelerate it into the market, and dominate your sector. We then also work with clients that are looking to grow in order to exit and sell. As you move towards the later years of your commercial career, a business that has generated good income for you needs to be reshaped in order to secure an exit that would allow you to monetize the years of investment, risk, and time that you have put into your business. And then we work extensively through succession. Family businesses, professional services businesses, where typically your exit path would see you succeed responsibility of your business to the next generation of young leaders with the view to secure your future through payouts that might occur and should occur as you transfer not only responsibility but ownership of your asset from yourselves to that next generation. You cannot do that successfully unless it's preceded by growth. To get this right, we had to resolve 9 impediments that we've seen across most of our clients. In leadership, how do you remain relevant in a changing, noisy environment? It's extremely competitive out there. Customers are becoming increasingly skeptical, and we're moving into a world where products and services are commoditizing at a tremendous rate. Relevance is vital to stay alive and see your own future. Time. Most of our clients complain about how their time is spent rather than invested. More time doing and less time leading. If you're not leading the growth of your business, who is? And then control. How do you effectively delegate and execute a delegation plan that sticks, where once you have delegated, you can be certain, you can be sure that what's been delegated will be delivered by a team. Essential to release time. Time is essential to maintain your relevance. Through the engines of the business, increasingly, sales and marketing is becoming tougher and tougher. How do you find your customers, hold them, win them over, retain them, and then leverage them to grow your customer base further? In operations, how do you grow without chaos? There's nothing more frustrating than securing new growth avenues, only to find the profitability and the veracity of that growth being eroded by operational issues on delivery and service. And then team. In a world of increasingly skilled, smart, capable people, how do you find the right people to do the right thing at the right time, all the time? Those 3 engines are essential to provide the platform for growth, without which, yes, you can have an income-generating asset, but could it be turned into a capital asset? I doubt it. Finally, value. When you seek growth, when you chase growth, when you look for growth, how do you secure that growth so that it hits 2 lines, the very top line and the very bottom line? Often we see growth emerging in companies, but the cost line tracks the revenue growth line, which means profitability remains the same. Often the result is a far more complex business with a lot of risk that might have bigger values, less profitability, eroding the opportunity for you to get a real return. Are you building a job or are you building an asset? What is your role in the business? And are you the proximate cause of that business's capability and functioning? If so, if that is the case, in truth, you have a job rather than an asset. And then wealth. We fundamentally believe that we always should be starting with the end in mind. I don't believe there's one business owner out there who would agree or not agree that ultimately, with everything we do in our businesses, our aspirations, our dreams, where we're taking our businesses and how we build them, the ultimate intent is to be able to exit that business for a capital gain. That makes your business, should you succeed, your greatest wealth generating asset. 9 impediments which we work with business owners to resolve by building an asset of value. It's a simple, smart, imminently scalable growth system made up of 5 layers. In the first instance, it begins with how you position your business. Globally, some of the biggest companies in the world still position around product and service features, or they position around price. Many business owners argue that service is what differentiates them. Customers ask, what makes you special? And if you say price, know well that your competitors will marry and match your price. If you say it's the features of your products or service, sheer competition will see competitors marry and match the products and features. And if you say service, is it service with you or without you, impacting your ability to scale? What we have noticed over the last 10 years is that the businesses out there winning are those that ignore the service arguments, the products and features arguments, and the pricing arguments, and rather locate themselves in the heart and minds of well-defined segments of customers that they serve. And through serving them, using products and services, solve real, tangible, quantifiable problems for them. And through the way that they run, build, manage, and operate their businesses, create experiences that resonate with those segments. Who spends money unless you can get a problem solved? And if you can get the problem solved, who will spend it if the experience is terrible? Once we've understood how to position a business in a noisy, overcrowded marketplace, the next piece of work that we engage in is about turning all the functional activities of the business into business systems. We articulate it into a single growth system in its own right. Through this, if you can get your marketing, whose purpose and function is to generate leads, sales, whose measurable outcome is lead conversion into clients and customers, operations, whose only function is to deliver on a consistent, reliable basis the experience that you promised and the outcome that has been acquired. If you can articulate your business through all those functional activities to be put together and operated in a single seamless system, it then delivers reliably on your positioning time and again. With that, you locate yourself to now find the right people to do the right thing at the right time. Engaging a team, a purposeful team that takes ownership of each of the commercial functions, that deliver against the positioning that you're building your brand against, wherein which they know what to do, when to do, and how to do it, through which you can measure every single outcome and activity in order to identify where to improve certain of the functions, where to improve skill sets, and where to improve, most importantly, collaboration between the team. These three elements build the base of every business out there. And getting these three elements built right in your business will give you two outcomes. The first is organic growth, pedestrian growth. In very developed economies, growth that's running at 4, 5, 6, 7% per annum. In developing economies, growth that's running at 9, 10, 11, 12% per annum. This is growth that occurs with only 30% of your time invested in the day-to-day activities. This is growth that also releases your time to focus on the next two layers. First being, how do you now accelerate growth? You've got traction in the market, you understand how to position your business, your system of delivery is working well, your team is leading the engagement with the market on both new client acquisition and service delivery through the systems. Growth is your next option. And through that, moving into next level growth takes time, because that time needs to be led by you. Identifying paths to growth that erode all the effort in terms of how you positioned your brand, in terms of how your systems have been copulated, put together, and articulated, in terms of the capability and confidence of your team, simply draws you back down into the heart and the depth of the business. The issue about I need more time to lead and less time to do is fundamental in this case. Those paths of growth need to lift your revenues and then lift your EBITDA profitability at a disproportionate level too. Those paths of growth must not fragment the underlying platform that supports the growth of your business. With that in place, as you start migrating and moving to the later years in your business, the question that needs to be asked is, how do you secure your value? There are 5 levers of valuation that all of us have the ability today to build in and bake into our business. And yet, by far the majority of us only realize what the 5 levers of valuation are 10, 20, 30, 40 years in, when we're ready to exit and sell. Those 5 levers of valuation secure income growth, they secure capital or equity growth, and most importantly, they provide you with a business where you are predominantly redundant. The 3 qualities of an asset: income growth, capital growth, and tradability. That's the difference between building an asset as opposed to building a job. I want to share a quick story with you. These 5 layers, incidentally, will deliver your growth for you, they ensure your profit, and they will release your time. A number of years ago, in fact, one of our very, very first clients was this very, very grumpy, extremely difficult baker that we were engaging with. 54 years of age, he visited Aurik, frustrated beyond all measure. He was a 4th generation baker. He had secured from his great-grandfather, a croissant recipe that came out of France. And on the back of a croissant recipe, his great-grandfather built a bakery, his grandfather built a bakery, his dad had built a bakery, and he had built a bakery. It was a lineage of bakers. It was in their blood. The reason he came to see us is because he wanted to exit the business. He said to us that a business he loved, he now hated. It had become a slog. Day in and day out, it felt the same. Day in and day out, he felt that he was being driven by his suppliers, driven by his team, driven by his customers. He wasn't leading. He was in the world of doing. In order to try and release himself from it, he had put the business onto the market for 24 months. And there was an enormous difference between the valuation he believed the business was worth and what the market was prepared to offer. It simply was not tenable. And through this, we agreed to work with each other in order to try and improve the valuations. The outcome was really exciting. The business itself, which was integrated across the baking industry, had been simplified through a repositioning activity set that saw it focus predominantly on the hospitality sector. Before, he was in retail. He was in baking ovens. He was in baking raw material distribution. He was in hotels too. The simplified business allowed him to build a system of delivery that ensured penetration into the hospitality industry improved dramatically. In selling into the hospitality industry, traditionally an industry that would acquire this category of product through the food and beverage manager, he further learned that in multinational organizations, the buying process occurs through committees. On the committee, finance is represented, procurement is represented, human resources is represented. Over time, the system that he built started to market directly across all 4 parts of the procurement process. And through that, he started to enter aggressively into the hospitality sector, socializing his brand, meeting the requirements of all the decision makers across this anomalous group called the multinational hotel conglomerate. He dominated in hospitality, and over a period of time, with the positioning well defined, a system of delivery in place, and his team empowered to run that positioning, he found himself released 70% from the day-to-day activities of the business. With that, his next level growth strategy centered on supermarkets who also required a 365 fresh bake onboarding process. Morning in, morning out, 365 days of the year. In delivering the continental breakfast to the hospitality sector, he began to deliver the fresh baked morning trade to the supermarket sector. He used the same system of delivery. He used the same team. They all had the capacity to deliver at scale. In the first 2 years that we worked together, his revenues, annual revenues, moved from 54 million rand to 136 million rand. Profitability increased by a whopping 24.3%, and the original valuation he had been offered of 17 odd million rand started to shape out at over 200 million rand. We've worked with him 3 times subsequently, And that business today is running at 1.3 billion rands worth of annual revenue. A great story by simply building an asset of value. But let's go to the future today. If we start with the end in mind, more or less globally, more or less, all businesses are valued at around 2% of EBITDA. It will vary slightly up and slightly down depending on the life stage of the business, the sector you're in, social political trends, the economic behavior of the environment you're in. But mostly all businesses are valued at a 2 multiple. At least that's where all acquirers and investors begin. So if we have a business that's generating $1 million of EBITDA profit, the valuation of the business today sits at $2 million. So think about what your annual EBITDA is, your profit before tax number. Apply a 2 multiple to it, and irrespective as to what your asset base may or may not look like, that's a starting point of valuation for your business. I'm going to share with you how a buyer or an investor then looks to attack the valuation with the view to lower the overall valuation of your business so they can acquire it for a better price or alternatively invest on a cheaper basis. The first question they ask is, what makes your business special? And unless you can distinguish yourself from the many competitors you have out there, the valuation remains at a 2 multiple. Think about the bakery. In the 5,400 bakers that exist out there, as an inquirer of any baker, when you go and speak to those bakers and you say, what makes you special? I can assure you 98% of them will say, our croissant recipe sets us apart. The next question that gets asked is, if I acquire the business without you there, how does it work? And to the extent that you can show that you have a marketing system to generate new leads, a sales system to convert leads into clients, an operations system to deliver on the promise of your service, and you can show that those systems exist not only in your head, but are shaped out, designed, and articulated through activities placed into a sequence with measured outcomes, you lose the advantage of defending your valuation. Understanding what makes you special and how the business works, the buyer then says how and who makes it all happen. To the extent that you can show you have a purposeful team made up of individuals doing the right thing at the right time, running the systems that deliver on your proposition, you secure an additional multiple. Thereafter, an investor says, where is future growth? And future growth is always forecasted on the previous year's growth. If you're looking to exit prior to growing your business, the future growth that an investor or an acquirer looks at is going to be dampened horribly. The final question an investor asks is, without you there, how will this whole thing hang together? To the extent that you can show that you are not the proximate cause of the business, you're able to then defend and increase your valuation. Answering positively in all these instances has the impact through these 5 levers of valuation to lift your multiple from a 2 to eventually a 7, taking a business that today might be valued at $2 million to one that has the potential to be valued, the exact same business built in this fashion, at a $7 million valuation. To the extent that you cannot defend your valuation, with each question set asked, attacking each of these levers over a period of the debate and discussion and negotiation, the valuation of your business diminishes. The 94.6% of businesses started that generate good income but cannot be sold are not able to defend what makes them special in a highly competitive world, demonstrate and show how they make it all happen, ensuring that there's a purposeful team to bring it all to life, demonstrating growth before exit, and ensuring that the founder or founders themselves, post-acquisition, won't impact the value of the business. This is the difference between creating a business that's built into an asset as opposed to a business that's built into a job. How do we work with you to build your business into an asset of value? Well, building a business and sailing a ship have a lot in common. If you think about your particular role, think about it within terms of the architecture of a ship. There are two locations that are critical that need to work in any ship sailing out at sea. You have the bridge up at the top, and at the bridge you have navigation equipment. You've got control over where your ship is sailing to. And then down below decks, you have an engine, and that engine needs to be fed diesel, coal, whatever's making that engine turn. The job of the engine is to turn the propellers and give you momentum. The job on the bridge is to make sure that you're moving in the most efficient way to a final destination. There are two destinations only for every business. It's either a sale, an exit, or closure. We argue that in how you build your business today, you need to do so by securing that future destination through building an asset of value. To do so and increase the value of your business whilst ensuring that exit, you need to be spending 70% of your time up on the bridge and 30% of your time down in the engine room. How do we then sail together? If the destination is the asset of value, we engage our clients first and foremost by running an extensive set of diagnostics. We look for the 207 activities that make up a complete system of delivery, from marketing activities, sales activities, operational activities, administration, people, and finance. All of them well-defined, well-articulated, integrated together. We look to see what's there and we look to see where the gaps are. We then look at the business in terms of its numbers, translating numbers into ratios, which are rich in story, pointing to further opportunities. We look at the business within the context of the market and how you've located your positioning, to understand the influences of customers and suppliers, to understand the influences in trends of legislation and technology, and ask, where does the future of your industry lie, and how do you get your business there today? And then finally, we look at the team, your leadership team, to understand the dynamics between yourselves. With all of that translated into data, looking at cold hard facts, we then ask, what would you like to achieve in the goal setting process over the next 24 months? 3 strategy goals, 3 number goals, 4 system goals, and 1 personal goal. A goal is only something that has a measured outcome. And a goal with a measured outcome is made valuable when the path towards achieving that goal is articulated and demonstrated in milestones. Much like navigating a ship, if you understand where you're departing from and where you wish to arrive, you can mark through the GPS points in the open blue sea where you are located, ensuring you arrive in the shortest possible time. With that set, we configure the asset of value growth system to deliver on those 10 outcomes. Through that, our facilitators then work with you and your teams to position the business in a competitive, overcrowded marketplace to set you apart. From there, once we've understood how to position the business effectively to deliver on your goal outcomes, our teams work with your teams to build out the activities and sequences with measured outcomes and define job descriptions to support delegation around how you will generate new leads, around how those leads will be converted into clients, how those clients will be serviced through operations and managed through administration. That single growth system starts to simplify and create scale for the opportunity to then move into next level growth. Over this period, by working with your team, we immediately take the value they have to offer, making them co-creators of the underlying systems that they themselves will be responsible for leading and driving. It's the shortest path to growth, as opposed to designing a growth strategy that never ever finds traction with the team and therefore on the ground. This releases your time to then focus on next level growth. And through that, we work with both you and your leadership team to identify the pathways that would see not only a lift in your revenues, but to do so on a moderated cost base increase to ensure that that new growth translates to profitability in the bottom line. The way we do this is we work with our facilitators. In every single instance, you and your team would have the benefit of working with 13 accredited Aurik facilitators, each topic experts across their domains. I think it's fair to say someone with strong capability in operations might well be someone who doesn't have the same match strengths or skill sets in marketing. The right horse for the right course is essential. Every business is a 360-degree set of complexities, and ensuring that you have a comprehensive multidisciplinary team supporting the process of your growth is essential in order to get the optimized outcome. They have seen many businesses, they have seen many systems, and fundamentally, they facilitate the engagement behind the activity that needs to be employed by working both with you and your team. That process of working with your team is essential. If the ultimate position is that you need implemented the growth system and your team is involved and taken along the journey of building out the growth system, through that, they take ownership of the systems. They become accountable for the systems. They're capacitated to run and implement the systems. Talk turns into walk through that activity and that activity alone. At the same time, the systems generate extensive data. We build out a dashboard for your business. And through that, we articulate what the goals are that we're intending to achieve together over the period of time together. And because each goal has measured milestones, we are able to work with you through integration sessions, monthly sessions, using data in the dashboards to ensure that we're on track to hit the destination against which we are sailing the ship. At the same time, the dashboard shows you a visual representation of all the system sets in your system of delivery that you're building. Because they have measured outcomes, and because those system sets are built by your team, through the dashboard, you're able to delegate responsibility for the performance of those systems. Your sales and marketing teams are responsible for generating new leads and converting them. Your operational teams are responsible for servicing them. Your administrative teams are responsible for creating the right experience and ensuring that billing and management takes place as it ought to. Through visual representations, through data, and through user rights on the dashboard that we built for you, you're able to manage your business literally from the bridge of one single dashboard. Importantly, what we do on the dashboard is we accumulate 27 points of data every month. That data is used to then forecast your growth rates and risk. But more importantly, that data is used to build a body of evidence around how your positioning is giving you traction in the market. Your business runs on the back of a system of delivery. Your team is performing in each of their domains. Next level growth is appearing, creating separation from revenue to costs in deepening profits so that any potential investor or acquirer has evidence of the past to forecast the future, and through that agree to the valuation that you believe your business deserves. As we move to a close, I want to just share with you 5 reasons, including an ace up my sleeve, around Aurik being the best growth partner you can hope to have. They say, what's in it for me? I love the 5 finger salute. And really, we should look at life from a five-finger salute wherever possible. In closing the gap and maximizing your economic prime, we become growth partners. We are aligned and have similar interests. 70% of our fees are linked to your performance. We don't bill you and then leave you. As partners, we evaluate you as much as you would evaluate us in order to ensure that we have good chemistry together and in order to ensure that from a function point of view, we can deliver what you need delivered. And from a function point of view, in doing what we do, we know we will get the growth outcome. After we have been through that process, we then agree a risk performance fee structure that makes us align from day one. Next, from a value perspective, 13 expert accredited facilitators will work with both you and your teams right across the implementation of your growth system. Impact. We work with you and your team to implement and delegate super fast. If you recall from the earlier factual accounts that I shared with you, 5.1% of businesses provided with growth advice were able to implement it. In all the businesses we surveyed that wanted to grow, 95.6% of their employees had no relationship nor understanding of what the growth strategies were. By simply solving for that, talk turns into walk. It's tangible. Through the dashboard, there's evidence of the work we do together. There's a visual display of your systems. There's team accountability, and goal attainment is measured on a month-to-month basis, holding you and ourselves accountable to deliver the outcomes that we've agreed. And then finally, it's a single complete relationship. The asset of value growth system is simple to manage and lead. It's smart, using data to make big decisions, and it's imminently scalable. And through the asset of value growth system, we have ensured that not only will it increase your income growth in the period that you remain in the business, but it will do so by building out a business that supports the 5 levers of valuation. At the end of this month, we're announcing some of the aces up our sleeves. Through the work we do, we build networked relationships. And those network relationships give us access across 142 countries globally to support any mergers and acquisition activities. For example, if you're looking to enter into a domain and you wish to do so through an acquisition, we have relationships that are able to identify potential acquisitions, provide all the advisory support for those acquisitions to be made, and support, in some cases, the funding to enable those acquisitions. In instances where you're looking to move from one stage of your career to the next through succession, how you structure the succession and create the legal frameworks. Through our relationship with Anderson Consulting across 142 countries, we've identified a good fit partner who are entrepreneurial, understand the business owner mindset, and provide Aurik clients with a 30% discount on all fees. Our growth is your growth. And where, in sticking to our core, we need to draw on partners outside of our core activities to support the accelerated growth and value of your businesses, we do so through the ecosystem that we have developed and built around us. And with that, I want to move towards closing. My ask is very simple. Let's meet and see if we can impact your business. If we can, we'll provide you with a 24-month growth proposal. It'll include all costs. It'll include the establishment of your business into an asset of value. Growth doesn't appear overnight. It needs to be built with many moving parts. It takes time. It takes time to implement the activities from one period to the next so that the bricks that sit atop each other in that sequence will allow your asset of value to emerge. If we agree to work with each other and see value in each other, you secure a dynamic growth partner with proven revenue growth and EBITDA growth history, the ability to have a business that will secure capital because it's built to do so, and most importantly, lock in the exit strategy for yourself 3 years, 5 years, 7 years, 15 years down the line. If not, we exit as friends and a relationship for the future. I'm going to move to the breakout rooms where we will spend 15 minutes or so having a quick engagement around the 3 topics that we put on the table. Corinne Engelbrecht is the co-founder of Aurik, who will be talking to scale. It's all around the system of delivery, establishing teams and delegations, and building capacity in the business to support growth. Johan, a partner in Aurik, has extensive experience in the area of business mergers and acquisitions and capital raising. We'll talk to future exits and sales, valuation, and how to secure and win EBITDA growth. And I'll be talking about how to position in very competitive environments, the new means and manners of acquiring customers, and how you build and bake in organic and next level growth. Thank you so much for being here with us. We will address all the questions that are asked. And for those of you who can join us in the breakout rooms, I look forward to doing so. For those of you who can't, we will be sending you an email with the view to engage, have a conversation, and see if we can be of value to each other. I'm going to ask Pippa, my producer, to set up the breakout rooms. Thank you, Pippa.